the Magnificent Seven have become the dynamic duo, right? Take a look at this, right? There were only two of these bad boys. All the rest of them have been trading down here. But after Meta posted that financial report last night, Mark Zuckerberg said that, you know what, forget about these goggles. We want to be an AI player. Well, now Meta stock has started to swoon as well. So I don't know. Are we just talking about like there can only be one, like the movie Highlander, Nvidia, last one standing? Well, my next guest says that in a perfect world, mega cap tech earnings from Meta, Microsoft, Google, and Amazon could have actually sent the Nasdaq into recovery mode. Instead, it's not in recovery mode. It's actually back on its heels. So let's bring in now from Simpler Trading, their VP of Options, Danielle Shay. Danielle, so Netflix and Taiwan Semiconductor were slammed. They had solid results. Meta now has solid results. They joined the pain. And I know that you've said in a sort of a perfect world, these names would have lifted the market up. So what's so imperfect right now?
So, Charles, when you look at earnings, typically you want to see companies beating EPS and beating revenue estimates and trading higher, right? But that is not the flavor of the season this quarter. The market has incredibly high expectations and is very jittery. And so what we're seeing is one tiny little comment as it relates to guidance or something the executives say on the call, and the stocks are getting slammed.
Right.
So right now, we have a major risk with mega cap tech earnings. Even though these companies are strong, they're beating earnings, and overall they're doing well because we are seeing a little bit of slowing growth.
So I saw this meme yesterday, and I think it's spot on. I want to ask you about it because I think it will help investors. One of the more frustrating things is when you own something, a stock, and the news is good, but the stock goes down, and sometimes the news is bad and the stock goes up. So on one hand, Tesla doubles a double miss. Tesla missed earnings by a big shot. They had the worst earnings in 20 years. They missed on revenues. The stock exploded up 12 points higher. Meta crushed it top and bottom. It's getting hammered. And what I think is so odd about this, coming into earnings season, it was the maturation, the mature, efficient Mark Zuckerberg who was going to be slow and steady, and it was a wild card, Elon Musk, who you had to worry about. And it feels like Elon Musk was the one who had a game plan that was reasonable, whereas maybe Zuckerberg is back out there sort of where Wall Street doesn't want him to be.
You know, Charles, I completely agree with you, and I love this meme. And what I'm going to point out to investors is that you have to pay attention to when a trade is just incredibly heavy. So, for example, with Tesla, it was the most obvious short. It's been in a downtrend. Everybody's worried about Musk. And so what happens is the trade gets crowded. And so when there's just a little bit of good news, it leaves room for it to rally. And with Meta, it was the opposite. Everybody was incredibly bearish. You know, everybody thought it was going to explode. And so you get a little bit of negative news and it can roll over. So pay attention to crowded trades because that is when they can go the opposite direction. Okay,
another thing that you pay attention to is the charts, right? So NASDAQ moving further down here, away from the 200-day moving average, near a very pivotal support point. If things start to break down further from here, how much downside risk do you see in the near term?
Charles, I think that we have another 500 points of downside, maybe even 1,000. It's going to depend on how short investors get. Right now, we're seeing the put-call ratio a little bit elevated, but it's not elevated enough for a bounce, and we still have a lot of heavy macroeconomic factors. So what I'm eyeing here is for when investors really start to panic, we can finally hit some critical support zones, and then at that point, we can bottom, but I don't think we're there yet.
You know, and to that point, I think today's session is holding up a lot better than I thought it would at 9:25, 9:29. So before I let you go, semis, speaking of panic, Nvidia really is the key still in my mind, right? So semis are hanging in there. But one thing about the semiconductors, April is one of the worst months ever, whereas next month, typically May is the second best month. So if you're in semis, do you kind of hold them out, you know, just kind of grind them away for another week, hoping that seasonality helps?
So, Charles, when you're looking at the semiconductors, that's another sector that's highly in focus here, but it's also broken through the 50 simple on the daily chart. This is a critical support zone, and it has got to recover. We need to see Nvidia start trading higher, which is a little bit dicey right now. And we need to see it break SMH up above 220 before it can continue higher. So that's the line in the sand for me.
All right, cool. Hey, Danielle, thank you very, very much. Really appreciate you. Folks, earnings season taking a toll, really taking an interesting turn, rather. And my next guest says that really this all could be a sign of chaos hitting the fan. Barry Knapp is here to explain that and so much more. We'll be right back.